Now, your money masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. This is Steve Rhodes, Tom O'Brien. We do appreciate you being with us. Dow right now is off 85. NASDAQ down 22. S&Ps are off 7. You got gold getting smacked around. That's down 46. Silver's off $1. You get bonds up 21 ticks. And King Dollar is on the move.
It's a little rocket ship.
Oh, baby.
NASA.
I'm telling
NASA
you.
action here, huh?
It's, the headwind that the markets get with King Dollar is absolutely incredible. And it's, the bottom line, folks, is that it's showing not only strength here, but if you actually do go over to the other side of that King Dollar, which would be gold, is that we're already at 102,000 contracts, big numbers. That 15 to 35 is game.
Yeah. Once you come down and test the bottom of that,
it's game.
For sure.
So if you're a bull, what you want to see, of course, is that you want to see it tested. You see, you get it tested on lighter volume, and then you got yourself a large consolidation. And that. And in the gold market in the last 10 years, that's normal.
Yeah.
It's been huge. 2 corrections. This would be the 3rd huge correction. Yeah. So the bottom line, it is out there.
Yeah.
Now,
you're talking at least 150 point consolidation area.
Yeah. Even more money.
Yeah.
More money. A couple $100. Hey, listen, that's good. That's where you can make money.
That is good.
That's where you can make money. Now, Bank of America, they come out with numbers, and if you want to know why people are angry, folks, okay, you can just look at all these bank numbers and basically how they're fudging everything.
Yes.
But check out what Bank of America did. This is sick, folks, okay? And so now you have the FDIC and the Federal Reserve arguing about what they did. Wait to hear what they did. They have 73 trillion.
73 trillion?
In derivatives.
Oh, my goodness.
73 trillion, and this is what they did. They moved it off the banking unit, and they pushed it, they moved it off the Merrill Lynch unit and the broker-dealer unit, and they moved it to the FDIC of the balance sheet. So what that does is that sticks all of you out there, okay, with the aspect that if, in fact, those derivatives go south, okay, that's it. It's, we're on the hook for it. Now check this out. This is what's amazing. When I say they moved it off.
Yeah.
Okay, so picture when you
it was a Merrill Lynch.
Yes.
Okay.
Okay.
And because of the buyout.
Well, no. Watch how this goes. This gets pretty wild. How this goes. Let's say that you and I are the counterparty to that derivative, right?
Yeah.
We say to Merrill Lynch, we see that trade's going bad, right?
Right.
We say we want more collateral.
Right.
Because, see, they downgraded Bank of America.
Yes.
Okay? So as soon as they downgraded, we had the right to say we want more collateral. Just like a broker-dealer says to us that they want more collateral.
Yeah,
okay?
that's
Trade's
right.
going bad, you want more collateral.
That's right.
Well, what they did there is that they say, okay, hold it. We don't have any more money.
Yeah.
Okay? So what we're going to transfer it over to a unit that does have better credit.
Yes.
Okay?
Yeah.
And what? And FDIC.
Yeah, right.
Okay?
Yeah.
So there's the battle. And that battle is set up. And it's sick. Let me tell you something. Hopefully the FDIC will win the deal. We'll see how this shakes out. But I wish actually Sheila Baird was still there because she's the only one that had any guts during this whole deal.
Yeah.
Absolutely. And of course, what ended up happening is that she got overpowered by Gettner a few times. Okay? He's the devil.
Yeah.
We got a new devil out here. He's the devil. Oh man. Yeah, and actually one of the Tigers is saying that's why Beard is gone, and it probably is.
Yeah.
Because the bottom line is that divide and conquer.
Yeah.
And keep taking everyone's money. So it's pretty sick, man.
Yeah. No question.
So, what happened to the market? The market was up all over the place this morning. I don't understand. I mean, I saw the futures were up. They were saying, hey, everything's okay, man, right?
Well, now, wait. The futures, what they did was they did that move of the move.
Yeah.
They did that. They did exactly what you've taught us that they were going to do. They got down there. They finished the race. They saw the line. They said, okay, 8 o'clock, let's take a little breather here.
Yep.
Take a little breather. Let's recharge our batteries. And then, take on the next leg. But Asia last night was absolutely, Asia is really now screaming out, look out below.
It is. Oh, it is, man. It is.
Big time.
It is.
You know, the Nikkei, I mean, it's just, whether it's the Nikkei, the Hang Seng, you know, it is just simply saying, you know, look out below.
And watch, folks. You talk about, so if we just look at the Hang Seng first, right?
Some volume out there, too.
Oh, yeah. Come right out of it. So that the Hang Seng, we just made a high two nights prior with 1.6 billion, and you come down at 2.1. See ya, don't want to be ya.
Yeah.
We go to the Nikkei.
Yeah.
You take a look at the Nikkei. Let's see what look at the mess that is.
Oh, yeah. It's absolute.
Nikkei. Okay, so you know, Nikkei got she can't get out of the range.
Yeah.
You know, you talk about gaps all over the place.
That's why I've never, you know.
Holy cow.
I mean, yeah, I know. An index.
Yeah.
Right?
No, totally.
It's just like, it's a mind blower.
And so let's go to Shanghai. And you know what's great about Shanghai right now is that, so Shanghai, she got toasted and roasted also, and she's going to at least go after the low. So we'll see where that shakes out. But that low is that's pretty intense. Now, what's interesting on a fundamental basis with Shanghai, they say that they're growing by 6%. I mean 9%.
9%.
And
well,
like,
still, but the lowest in the last 2 years.
Right.
Okay.
Right.
So, you know, so you still kind of, you know, have to put things into some type of perspective.
Yeah. You know, my perspective is on that. That they're not even growing.
That's okay.
You know what I'm saying?
That's right.
That they're not even growing. That, you know, okay, you know, we know.
If you're in the same place or worse than you were 2 years ago, in essence, right? There is no real growth.
That's right. And you have to believe the numbers 2 years ago, and you have to believe that, you have to believe that all the buildings, people in the buildings, you know.
That there was real growth behind it.
Yeah,
you know, that's
right.
What, you know, that's what you have
absolutely.
To,
Versus, you know, the corruption, I think, inside the provinces, I guess they call them, versus the main central government. That's where this next thing's going to spill out to, because the amount of money that's been pushed into those deals, and, you know, bottom line is that's where the glut comes, and now how they're going to fill them up.
Yeah,
you know?
Yeah, no question. I like the story here in the USA Today about the investors are not hungry for China's dim sum bonds. Now, which are just simply the bonds that are denominated in yuan.
Oh, is that what they have?
Yeah,
okay.
that's what, and they call them dim sum. Now, it's cool.
Okay.
Because, you know, I used to go over to China, mostly Hong Kong, if you will, and a really cool city if you haven't been there. Now, it's a different kind of an environment because, you know, what was so strange about a city that's so populated is you'd be walking on the street corners, and, you know, you got all these ducks, if you will, just hanging out there in the open,
right.
With all the dirt and all the dust, all the bus, everything going by, and there's, you know, from
no refrigeration.
From a sanitation thing, I'm just kind of like, you know, I can't do that. But what I always did enjoy is being over there on Sunday, because on Sunday, you know, it was the families went out for breakfast or brunch, and it was always pretty much going to these dim sum restaurants, which are really cool, really fun. You know, and nice food and everything. But so it just caught my eye when they were calling them dim sum bonds, because they're just these little small bonds. And I guess some of our corporations, you know, have been using that to float some of their growth over there.
Right.
You know, so they'd be issuing bonds. But I guess the appetite is going away.
Yeah.
You know, because of Greece and just bonds in general and the currency. And so it just shows, you know, the strength in the U.S. dollar versus other currencies out there.
No doubt. And you'll see, you know, as these earnings come out, folks, you're going to see the headwind that large international companies have with the strong dollar. Yeah. And they're going to, you know, wait till you see, we'll find out who really loves America and who doesn't. Because what you're going to hear all these folks out here that you think, and they're going to have a hard time. This is what they're going to have a hard time with. They're going to have a hard time because they've been pushing out so much garbage anyway, saying, oh, no, hold it, no, we got to save money, but no, we need a weak dollar. It's like you're going to see the hypocrisy in the whole deal, you know, about they claim that they want America to come back, but they don't.
Well, the interesting thing here is that, you know, whether the dollar was engineered or not, which I'm going to believe that it was, because you know when you take this action, you're going to get this result in most cases. So the Fed understood what QE2 and all that was about, and understood how it would impact multinational companies. But the reality is, even if they wanted a weak dollar now, because of everything else going on in the world, they really can't do that.
Right.
You know, you've got people saying, "Well, wait a minute here. I don't want to have my money in dim sum bonds."
Right.
Okay,
Right.
that's no flight to safety.
Right.
Even inside their own community, they're saying, "No, I don't want to do that."
No, exactly, exactly. Well,
you don't want European debt because heck, there's no clear signal with regard to how they're going to solve their debt issues over there.
no, they're not.
Okay.
They won't go to work.
Okay.
Here, our bottle of wine's coming in right now. Let's go. We got our bottle of wine. No, I'll tell you, man. I love Europe, and I love. Yeah. I actually, Italy's my favorite.
Yeah.
But the bottom line is that it's a different. It always has been. Well, as far as I've seen, it was always a different environment. My take on Europe, right from the get-go. I remember. When people say it's so great, I says, man, they took over Europe. The banks took over Europe years ago. They didn't have real freedom. You know what I did? I opened no, seriously. I opened an office in London in 1983.
Okay.
And it took like 2 weeks to get a phone. Right, and folks, that's how it was then. It's like 2 weeks. I was looking at it saying, 2 weeks to get a phone. In the United States, I could open 5 businesses in 3 hours.
Well, yeah, absolutely.
And it was so weird. I said, well, why don't, But what it was the powers to be.
Yeah.
There was the powers that were.
Yeah.
That wanted to basically keep as many people down as they could.
Yeah.
Keep them on social reform. Keep them down. Give them some checks.
Yeah.
Keep the banking system going. Keep them on the and I says, man, this is a weird sit. And now, of course, it's coming home to rest. All of it.
Yeah. I suppose the only real way, well, not the only way, but one of the ways to weaken the dollar is going to be dependent upon the participation of the U.S. in whatever happens overseas.
Listen, my logic take is not going to happen. But I'll tell you this. This is why my take is I don't even think that anyone actually has. So picture this. The dollar went from 121 down to 70, right?
Yes.
We knew that gold was going to go, but we did absolutely not know that it was going to take 10 years, right?
Yes.
That gold would go, and the market saw that whole financial debacle in 2000.
Yes.
No one did.
Right.
No one.
Right.
So my take on that now is that it's the same with like the dollar going up. They're scrambling. They don't know anything. No, I'm not kidding.
No, that's what I'm saying. There are some outside, even though you might have a plan. That's like trading the markets, right? You've got a plan, but you have to have flexibility.
Oh, yeah.
Well, in this case here, you've got folks that are saying if they're going to run for any cover, it's still that good old dollar.
Absolutely.
You travel around the world, folks, taking the dollar anywhere is
dollar.
accepted.
King dollar.
I don't care whether it's a taxi cab or a grocery store, whatever. The dollar is accepted everywhere. Better than American Express.
That's right. That's a beautiful thing. This is Steve Rhodes, Tom O'Brien. You stay right there, folks. We'll be coming right back. We have the Dow down 91, NASDAQ off 22, S&P's off 7. We're going to be right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Is the fast-moving investment world challenging the way you think about managing risk and return? You don't have to go it alone. Direction's alternative strategy funds feature built-in tactical management to help you find clarity for the path ahead. Direction Funds. I'm with X. To learn more about Directions Alternative Strategy Funds, please visit tfnn.com and click on the Direction Funds banner or call 877-434-9363. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Funds carefully before investing. The prospectus contains this and other information about Direction Funds. The prospectus should be read carefully before investing. To obtain a prospectus, go to directionfunds.com. Investing in index funds may be more volatile than investing in broadly diversified funds. The use of leverage by a mutual fund increases the risk to the fund. The more a fund invests in leverage instruments, the more leverage will magnify gains or losses on those investments. Distributed by Rafferty Capital Markets, LLC. Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. This is Steve Rhodes, Tom O'Brien. We have the Dow right now down 59. Nasdaq's off 13. S&Ps are off 2.5. Let's go to our man Rick in British Columbia. What's going on, brother?
How's it going? The guy that we phoned there, he was complaining a little bit because he said it's cooling off down there.
Yeah, it's like 75, right?
Well, Phil, white light for you guys.
That's good.
Steve and I right now in the studio, we're freezing.
Absolutely.
It is so. No, this is a fact. I come in the studio and I say, "Oh my God, I'm freezing," and I said, "Well, we'll have to go outside to get warm."
When my shows are done, I got to go put my sweatshirt on.
Oh man, I'm telling you.
Well, you know what it is. Even for like here too, like when we'll probably get some snow here in the next couple of weeks or whatever. But your skin just has to adjust to it. Once you spend a few days in 30 below, then when it's only 5 below, it feels warm.
You know what? Well, we're going to adjust to. We're going to adjust to you calling us, telling us how that feels, because I don't want to adjust to that anymore.
One time. Well, I've been in the concession business for a while, and I was in McAllen, Texas, looking at some retail stores down there. And up in Edmonton, the Edmonton Mall owned by the Gramasian brothers, we had a store at the Mall of America. And so they called and they said, "Hey, we've got a couple of spots. We really want you to come up here." And so, and I didn't really want, I wasn't ready to go, and they needed to make a decision. Right. Like tomorrow.
Okay.
So I hopped on the plane from McAllen. Now, it was like 80, 85 degrees. And this is around, I don't know, the December time frame, something like this.
Okay.
I arrive in Edmonton maybe about 10 o'clock at night, 40 below zero. So from 80, 120 degree difference, without a jacket.
Oh, my God. That's sick.
Without a jacket. And so, I don't know, Rick, 40 below, 5 below, it's cold.
That's sick.
It is. Well, West Edmonton Mall is a big mall.
It is.
I don't know where it ranks in the malls in the world, but they also have a big indoor pool, with water slides and everything like that. And I would imagine when it's 40 below outside, you probably feel it inside just a hair.
Yeah. It wasn't too bad, but I remember I had to pay the guy at the Avis counter, to go get my car for me.
Okay.
To, warm it up.
Oh, yeah.
To not come in until it was warm so that I could just simply run out to the car.
Intense.
Yeah. And then you're worried about not breaking down along the road or what have you.
Wow.
So I'm probably like a lot of taggers and tagresses, a little analyzing, okay, are we going to set up an ABC structure here, pulling back to, like, Tom, you mentioned the 1125, which is a false break if you look at the SPYs from that October 4th low. So I've been hearing that if you want to look at European banks, look at Barclays. Maybe there's better ones to look at as per being a bellwether. But what do you see with Barclays? I put it on a monthly, 3 or 5 year monthly. And
what is the symbol?
BCS.
BCS?
F is in Frank.
Cindy.
There it is.
F.
Okay.
Oh.
No, yeah, it's S.
Oh, is it? Okay.
Yeah. Okay, so let's see. You got Barclays, the low's 8, the high's 21. You're paying 2.5% dividend.
Well, you see, Tom, there at $16 on a daily, there's volume up there. And if we do pull back to the October 4 low there, you've got a perfect inverted head and shoulder formation to go up there. And so anyway, I just thought I'd mention that. So I'm just curious what your take is. Is there anything saying that we just had the top? And, yes, we went up on light volume.
We're looking at Barclays, and now I just turned around, Rick, and I put Barclays on a weekly, though, okay? And on a weekly, it's a monster ABC down. Right into, what? You're talking $5.
Well, put it on a 3 or 4 year monthly, and that's exactly where there's huge volume down there.
Yeah, no, that's where it wants to go. That's what it already broke. It broke the swings going all the way back to, 010, broke them with volume, blew it away, man, actually. 42 million versus 23 million. And that's a large ABC down, man. I mean, these banks, the writing on the wall, there's been a couple of them with the U.S. banks. And the biggest one, I would say, today was the Bank of America transferring their derivative position of $73 trillion. That's okay. Well, you don't transfer. Well, you try to get away with whatever you can get away with, but they're getting away with that transfer, and that's a big number.
Mm-hmm.
That's
huge.
And because what it's saying is that their counterparties wanted more money.
Yeah.
And they figured out another way that they probably still had to give more money to hold the trades, but the reality is that that's a problem. It's a huge problem. And $73 trillion, that means that the thing that's crazy is that means that they're still leveraged 50, 60, 70 to 1.
Yeah.
I mean...
Yeah, right.
One small mistake and boom! Cooking, brother.
Take care.
Have a great one. Have a safe one. We get the Dow down 34, Nasdaq's down 5, S&Ps are up 2. Steve Rhodes, Tom O'Brien, we're going to be right back.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2 week free test drive right here, right now.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, more than 40 different mining equities, as well as some of the most popular precious metal ETFs, including the GDX and the SLV. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report that will help you take advantage of investment opportunities at the current historic gold price levels. To order your Gold Report today with a free 30-day trial subscription, log on to TFNN.com or call our office directly at 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow down 33. NASDAQ is off 5. S&Ps are up 2. Bottom line is that you're up, down, all around. But let me tell you, folks, Europe's not going anywhere, so we're not going anywhere.
Yeah. And actually, it's just really part of the breathing pattern. Yes. And it's part of this sacred geometry. Actually, what I've got up on my screen right now is the small caps, the IWM ETF on a 60-minute basis. Now, I put it on a 60-minute basis, folks. You want to watch this on Tiger TV, because what this is showing expansions and contractions in between swing points. And what you've got here, what happened in the small caps in the 10:30 hour was it got down to a low of 67.85. Now, at 67.85, it was a 2.618 expansion from the swing point of at 13:30, so 1:30 yesterday afternoon, October 14th. A 1.272 expansion from the swing point at 11:30 on October 13th. A 0.786 retracement from the swing point at 2:30. And if you come down here to this swing point, which is at 1:30 in the afternoon on August 7th, it shows us 0.57. Right. Well, the 618 is 67.55 would be the price projection. The low got down to 67.85. 30 cents, that's close enough for me. So what you had is between swing points, which is really, where you've got buyers and sellers that have changed their positions, gone from long to short, short to long, whatever it is. You've got all this sacred geometry coming together at one point, and you could expect you would see the market take a breather right there.
That's the confluence. Yeah. That's the harmony.
Right. Yeah. And so it's actually, so cool about being able to take a look at that stuff. Yeah,
amazing. Absolutely. Tomorrow night, 6:30. Now you got to check this out, folks, and this is a free workshop. So tell us about the workshop. So
it's number one. I created a tool, to be able to help people absolutely save time and help them from not getting stopped out so much because of the volatility in the marketplace.
Okay.
All right, so it's all about position sizing. Whenever you get, and position sizing is really what it's all about, folks, because it's understanding how to minimize the amount of capital that you're putting at risk, but still maximize your return. And so I talk about the power of 1%, and it's really about just risking 1% of your capital. That doesn't mean...
Hold it, what? Are you one of those 1%ers?
I'm one of those 1%ers, baby. You bet. Now, look, in our newsletter right now, we've got at risk about 3%.
Okay.
But a total of 75% of our working capital might be at work in those three positions.
Okay.
But still what's at risk is really only that 3%.
Right.
And that's why people need to understand...
That's 1% at 3 separate positions.
3 separate positions, okay?
Right.
And what I want people to understand is that power of 1%.
Right.
I also want to teach them about positive expectancy. I was talking about that this morning.
Okay.
And positive expectancy in the system is understanding your distribution of wins and losses.
Right.
And comparing your risk to your reward and what it produces. So in my newsletter, I think our expectancy right now is at a 0.45.
Okay.
And so I'll show people what that means. And when you understand the power, when you have a positive number of your trading system, totally should free up your fears.
Right.
And you understand you're going to have some losses.
Oh, sure.
But you've got those risks at 1%. And so we're going to go through that and just everything that we can do to help people in 1 hour. It doesn't matter what level you're at. Whatever level you're at, whatever level of success you're at, you're going to actually take something away. You're going to see some tools that, whether you use the tool that I have or whether you do the calculations on your own, I still want to show you how to do it.
And what's so neat, folks, is that the clarity is huge. I've already seen it. So the clarity is so huge, it's unbelievable. And that's what we all need. You know,
it is.
I love that, get rid of the gray. I love black and white. I mean, it's where it's at. Period.
It's all about. Look, each of us have coaches in our lives that help us. That help us understand our potential. Help us, take more action. Help us find that next gear. It's the way that anybody who really wants to. We're in the world with people for a reason.
Absolutely, no doubt.
You got to be able to leverage folks.
And in this business, that was never happening.
Yeah,
and it's still not happening, but it's happening at TFNN, folks.
It is.
That's the bottom line. So it's pretty cool. Listen, folks, this is Steve Rhodes, Tom O'Brien. You stay right there. We're going to be coming right back. We get some nice volatility out here. You get the Dow down 29, Nasdaq is down 5, S&Ps are up 2. We're up, down, all around. Apple's off $1.50. IBM is getting toasted and roasted. We're going to be right back.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever. At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We got the Dow flat, S&P's up 3. You got the NASDAQ flat. We got the Bulls and Bears fighting like crazy out here.
We do.
No doubt.
Absolutely.
Now, let's see. If we go over to... this gets real interesting, folks. Volume-wise is that, like, if we look at the NASDAQ right now, volume is starting to come into it. And, of course, you get the NASDAQ flat. But what we actually did is that we came down and made a lower price point. And how we close here is going to be crucial, because if it's just against where we are right now, that's almost a rejection of lower price, and it's like, okay, the highs are going to be game again. If you close right in the middle, and we just had a man from British Columbia on, he's the... he at his house, at Rick's house in British Columbia, folks. If you haven't seen Rick's house in British Columbia, in his lawn, he has all these dojis outside. he does. He really does.
I love it.
Oh, my God.
Yeah, and on the cues, you're going into the September 20th swing point, that you're looking at right now. So, we'll want to see a close. If you're bullish, you want to see a close above the 57.35. If you're bearish, you want to see a close below that.
Yes. Yeah. And you have...
And the volume, you got 66 million shares back there. And so far, just simply in the first hour of trading, you're at 24 million. So there's volume in the marketplace, like you're saying.
Exactly. And what happens, this is what does tend to happen, folks, is that when the Bulls and Bears are fighting like this, you'll get the juice.
Yeah.
And so, like, if we're taking a look at this, if this can't make it the next 20, 30 minutes about another 20 cents higher, watch out. Because what you'll do, it'll sell right off down the other side again. So, Europe, what are we doing in Europe? Europe is still toast. The DAX has come back a little, hasn't it?
And the DAX has come back. It absolutely has. Let me pull it up too. It's fighting. It's fighting its way back.
Yeah.
But I don't know what the volume is behind that move, and it wasn't really going into a swing or anything. And look, as far as I'm concerned, right now what the DAX has done, it did its work. It's got this bearish engulfing up here.
Right.
After testing, trying to get in the swing points of August 15th, 4 times, couldn't do it. And, until the top of that is taken out, the DAX wants to go lower.
The
DAX wants to get into the 55,000 area.
Right. Well, what's interesting is that, so watch this, folks. This is where you can, when you're bisecting and dissecting a market, right?
Yeah.
I get the NDX up. Do you know what the strongest stock in the NDX is, folks?
Which is amazing.
You're going to love it. It's First Solar.
Yeah.
First Solar, folks.
It was getting smoked yesterday, I think, wasn't it?
First Solar, it should be the strongest stock. First Solar has just gone from $140 down to $52 nonstop.
Yeah, or $300 down to 50. If you go back to where it was in 2008, $300 down to 50. Talk about some investors in First Solar.
Oh, man. It's disgusting. It really is. So we got Electronic Arts next. Now, watch. This is getting interesting with Electronic Arts, because Electronic Arts is just finishing up. Well, it actually, let's see if it's going to get over that. It's a Gartley right now.
Yeah.
Okay? And, we'll see whether it's going to turn into a butterfly. But bottom line is that doesn't have anything either.
Yeah.
Look at that. A to B, B to C.
Yep.
I mean, it's by the 786 right now. There's no doubt about that. But, we'll see where that shakes out. If we go to let's see, who's next? NVIDIA. Nvidia's up 48 cents. That's just, you know, if these chip stocks can't make this, and they're the strongest ones, the Nasdaq can have a big problem.
Yeah.
You know, because Broadcom, BRCM too. I was looking at that earlier. BRCM. I think so. Is it Broadcom? 1 second. Yeah, it's Broadcom. Broadcom looks to me like it's in trouble too. And Broadcom, what we're doing here, so Broadcom, folks, look at it. It comes down viciously in April from 40 to 35, 47 million shares.
Right.
Tries to get into it with 25 million. Now it's trying to get into it with 6 million.
Yeah. Ooh. Yeah.
6 million, 25, 45.
What's cool about the Electronic Arts chart, folks, if you're looking at Tiger TV and you're taking a look at my screen, and Tom teaches in the art of timing the trade. You absolutely need to go to your local store and get it. You've got to have that book in your library. Teaches how stocks will come back to a breakout area. And if you go take a look at February 2nd, 2011, it broke out with 43 million shares. And where Electronic Arts came all now from there it went on and made the high, in July of 2000 at 2008 at $25. But it comes all the way back to that breakout area with 14 million, with 13 million, folks, and it's going in right into the high of that where you had 43 million. Came down there, said I didn't want to be there, wanted to move back up. Now it's making a move. Cool how they will come back if you have the patience. And when you see these, you just simply want to put them on a list, on a shelf, off to the side. Get some type of alert system and watch for them.
Exactly. It's amazing, isn't it? It really is.
It is.
Now, King Dollar, folks, is absolutely amazing. So picture this. We were down 100, now we're up 13, and the dollar. So picture the tiny move the dollar just made. We're still up 23, but the dollar, when that move was correlating, just went from 77.85. It was down 20 ticks, 200 ticks out of 1,000 ticks. But the bottom line is that's insane. I mean, because the dollar, folks, is not backing off. All the dollar is doing is going against another sign of strength.
Yeah, and when you really take a look at that, so the correlation is off just a tad, if you will, because the dollar, when it closed last night, was in the 77.46 area. You're trading 77.65.
Right.
And so our markets are up a bit.
Yep.
The dollar's still a little bit stronger. So the correlation is just, not that it's not there.
No,
but if you were going to correlate, tick for tick,
right.
Something's not right.
Yeah.
Okay.
You gotta love it.
And the question's going to be, where's the volume in the marketplace?
And let's see. So Apple. Oh, this is today. Oh, that's a beautiful thing. 4:30 today, folks.
Yeah.
Oh,
exactly.
We got action this afternoon.
Yeah.
Oh, baby.
Yeah. No
okay.
question. And in the case of Apple, we were taking a look at that chart.
Right.
About the worst thing for Apple to do today in the markets is just simply to trade sideways in this range, up and down a little bit, and for Apple to just stay in this area, because what Apple's creating is this little island out here.
It is.
And when I was originally taking a tour around the world, I was showing people the different island candle formations that are out there, and I said, let's just go to Apple so that you can see. I'm not being negative. Let's just go to Apple. Great stock. And look at the last time it made an island reversal pattern, which we did. And so if the numbers, it doesn't matter whether the numbers, the question is going to be how's the market going to react to the numbers that are out there and their forecasts. And the worst thing that would happen is Apple stays around here, tomorrow morning gaps down.
And well, what's great is that, you're doing the next hour, but then we get the option hour with Victor Smith.
Absolutely.
He's going to get a lot of calls. Might have to give him a call for some bear spreads out there.
Absolutely. Yep.
You stay right there, folks. Steve Rhodes, Tom O'Brien. We get the Dow up 16. Nasdaq up 1. S&P's up 4. We're going to be right back.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, before October 31st from your local Barnes & Noble store. And you will be given access to not just one, but 2 exceptional archived courses. Tiger Scaling, The Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you only have until October 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow up 23, NASDAQ up 4, S&P's up 5, and Don Kaufman today is going to be doing the option hour, folks. Okay, so of course Steve's coming on next. Then we're going to Chicago with Don Kaufman. We're going out to California with Ken Sharif 3 to 4, and then back right here 4 to 6. And Apple's a big number today. That's, this is going to be wild. I mean, Apple's been holding up the S&P and the NASDAQ.
Yeah. So if, technically speaking, if you're bullish on the marketplace, what you really didn't want to see taking place, you didn't want to see this island that it's got out there.
No.
You particularly didn't want to see it, and especially when, yesterday you had some light volume while you were up there, and the reason is because Apple does have another island reversal candle out there that I showed folks, and so so it's going to be interesting to see what happens. Look, if it takes off from there, that's wonderful, but you've still got that real potential here that they come out with numbers. Even in the after hours, they might like it. That doesn't matter. Give them a date. Give them the day to digest it. And if that thing gaps down, that'll take the Qs down. That'll take the SPYs down.
Well, the thing, and then what you have is this. It really depends on. It doesn't depend
and down to the bottom of that range where it's got high volume.
Oh yeah.
See, that's the whole thing. Where you've got this island out there, and you've got a high volume low. That's why it's suspicious. And you really prefer not to see that.
Well,
I prefer not to see that.
No, I agree.
And being a bull on Apple.
And what does happen is this. So if you're a bull on Apple, folks, and you're a fundamentalist, what you have to wrap your head around is this, is that is it 4 million iPhones they sold?
4 million, and 4 million, of course.
That will not be in this quarter.
Right.
So the reason I'm bringing this up, okay, because I know I can see how people can get excited, right?
Yeah.
And what will end up happening, so picture this, if people knew that, of course people haven't knew that was coming out. So in that ad, so when I look at that on a basis, oh, this is interesting, okay, because there's plenty of people that were waiting for that event.
Yeah.
Then the real kicker is going to be this. Did Cook have, he's been running the deal, but did he have enough, or did he have the controls last quarter to dump everything and anything that he wanted in that quarter?
With it being his first quarter as a CEO, he wants to look good.
Exactly.
Now, the other thing, we were talking about, for example, like China and whether they really were growing, even with the 9% growth.
That's right.
So when you take a look at Apple as well with regard to the 4 million phones, what you have to step back and realize is that a majority of those phones, I don't know what the percentage is, high majority, 80+%, were people who were just simply swapping out their existing iPhone for the new iPhone. Because what happens, as everybody knows in the cellular marketplace in that game, and the carriers want to tie you into contracts, as you build up these credits or what have you, so that you can swap phones, so that the cost to do that isn't that expensive.
And that's so cool. John's just so smart, isn't it?
Versus it being 4 million new users, that would be a whole different game.
Yeah.
So not that there aren't some new users, but I would think the majority, and when they went through and they were interviewing people online, and folks that I talked to, it's if you've got those credits, I'll go do that. I want the newer toy.
You know what's so funny about that is that so picture, folks. I'm the only. No, me and my son that don't use them. Okay,
yeah.
So this Christmas, everyone's going to get. I smart. I says, okay, I'll give them all iPhones. I'm going to get Andy the Air Max. So they're going to get plenty of business.
Yeah.
Isn't that funny though? No. I says, okay, hold it, because that's a good present. And I says, last time I did this, so it's going to be like they're going to have a heck of. Yeah. I mean,
Look, the best thing that could happen from a Apple standpoint is somehow it disappoints. It moves down. It tests out the October 4th low, rejects that on both price and volume, and then we're long, baby.
I smell a beer spread.
There you go.
It's Steve Rhodes, Tom O'Brien. You stay right there, folks. Steve's going to be coming back with you. Then we'll go to Chicago with Don Kaufman, Ken Shreve, and then back here. Have a great one, folks. Have a safe one.
See you in a few minutes.